Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from Antares Capital is Investment Manager Ken Hyman. Ken, welcome back.
Hi Carolyn, good to be here.
Well, Ken, it's well known that we're in a low growth, low rate environment at the moment. So what does this mean for fixed income investors?
Well, firstly, I think it's a very challenging environment for all investors, including fixed interest. And a lot of investors in fixed interest are retirees who depend particularly on the income they earn from the investments to meet their monthly outgoings, their monthly expenses. No longer they're earning a salary. So the income is very important to them. And these low yields and low returns are quite devastating. Now, investors can respond in two ways to that. They can either accept that they will try and generate the best return they can within their risk appetite. Well, they can take a bit of a punt and they can say, well, I'm actually going to go out on the risk curve. I'm actually going to take whatever risk is required to earn my targeted return. Now, I think there's a mixture of investors out there who are some are pushing the boundaries and some are not. But the risk of that strategy is that if you get it wrong, you may earn a better income in the short term, maybe 3 months or 6 months a year. But if you were to suffer a capital drawdown, let's say a capital loss, it takes a long time, a long period of income to actually cover those losses. So the trick is just finding the balance. And I think at Antares, for our income fund, we concentrate fully on just maintaining and finding that balance.
So Ken, how are you responding to this environment in terms of your Antares Income Fund investment strategy?
So what we're doing is we're focusing on the portfolio construction. We want to make sure that the portfolio is diversified, that we've got different sources of earning the targeted returns, but we're also we've got quite a defensive flavour at the moment. We are trying to earn as good an income as we can earn, but maintaining the bottom line on capital preservation.
So in saying that, Ken, what's your outlook for Australian fixed income markets and the fund as well?
So Karen, I'll kick off with the economy. I think that's where it starts, and we are quietly optimistic on the economy. We think the election's behind us, and we're hoping that it will flow through into better confidence amongst consumers and business. Just aspects of the transition from resources to the services sector are moving along pretty well. If we have a look at the growth in health, education, particularly tourism, they are bounding ahead. The companies in those sectors are profitable. They're employing a lot of people. We believe that is a key driver of this relatively low unemployment rate we've got at the moment. And just as an example on tourism, the visitors from mainland China and Hong Kong over the last 12 months was 1.4 million tourists, 1.4 million. And this is having a massive impact in the tourism industry, which is a big employer of labour. And so we think it's good building blocks for the economy. We also like the banks. We think the banks are soundly run. They're profitable, as we know. We think they are well capitalised, but they do need to raise quite a lot of debt funding because they're still lending a lot to the property market and a little bit to business. And they are being forced to pay some pretty attractive prices, which we like. So they are paying what we think are very attractive yields. They're offering attractive yields at this stage of the cycle.
And finally, Ken, you've had more than 40 years of investment experience. So what is the one lesson you'd give investors when it comes to investing in this kind of environment?
I may actually give you two, because I think over those 40 odd years I've probably picked up even more than two. I think the first one is income is very important, but maintaining capital value is even more important. It can take a long time and a lot of years of income to make up for bad drawdowns of capital. I think the second one would be the investment manager at the investment bank I was working at in the 1970s told me, never sell short the USA, never go short on America. And I just want to say at that time, America was down on the ropes. They'd been beaten up in Vietnam. Hostages were taken in Tehran. The helicopters that went in to rescue them crashed in the desert. It was bleak times, and I'll never forget that message. America's got an uncanny way of coming back from adversity, and I think it's very, very appropriate. The current point in time where many people say the arrival of China, the weakness in American politics, let that one pass, but they'll be back, and they'll be back with a vengeance.
Ken Hyman, thanks for the update on the Antares Income Fund.
Carolyn, thanks for having me.